The unemployment rate falling to the lowest level in 50 years last month. Does the strong jobs report make the Fed likely to raise rates in the near future? Steve Liesman joins us now. Steve.
Yeah, a super strong jobs report, Kelly, but not a super strong reaction from Fed officials. We have 8 members of the FOMC here at the Hoover Institution Annual Monetary Policy Conference. We've done 2 interviews on air. We have another one coming up. We've had 3 actually speak publicly. No one's especially worried about a tight job market or an overheating economy. Loretta Mester, the Cleveland Fed president, was just on a few moments ago on CNBC, says Fed policy is well calibrated. She sees growth between 2 and 2.5%, maybe more towards the upside this year because the data's gotten a little better, but she sees the economy in a good place. Richard Clarida, the vice chairman for monetary policy, said the Fed can afford to be patient, can afford to be data dependent. The funds rate now, he says, is a range of neutral, and the unemployment rate is not far from the neutral rate. That's important because it went down to 3.6, and he says, hey, it's not too far from where it maybe ought to be. One guy who's maybe not so patient is Jim Bullard. Now, he doesn't want to raise or lower rates right now, but he thinks the Fed might be actually too tight right here.
I think we're a little tight on the funds rate, not too much, but a little bit tight. I think the global safe real interest rate short term is about 0. If you add the 2% inflation target to that, you get to 2%. We're at 240. Sounds a little bit tight to me.
So, Kelly, we keep looking up to the sky around here, and we look for hawks, but we can't find anything but doves when we look up there.
Why do you think that is, Steve?
I mean, I think they feel like we're in an okay place. I think they're ready to we've talked about this for a while now, to let it ride a little bit. I think they feel pretty good about where fiscal policy is right now, that maybe it is adding some supply side. They've got that productivity number in their favor, and they're not seeing the inflation, so nobody wants to get in front of this train right now and say it's going too fast.